Hey everyone, Dave Kettler here with Market Misbehavior. Excited today to share with you 3 ways to use Seeking Alpha to improve your situational awareness. I talk a lot with my own Market Misbehavior Premium members about situational awareness, which is a sort of set of techniques that you learn when you learn to fly airplanes. And as a student pilot, I was introduced to this concept of situational awareness. The argument is when you're flying around in an airplane, you need to be scanning the horizon for other traffic or obstacles, looking at your instruments and just gathering information. What you never want to do is get yourself in your plane into a situation that is uncomfortable or unsafe. And the way that you avoid that is by having good, healthy situational awareness, meaning you understand what's happening around you. As a pilot, I would argue Seeking Alpha is a fantastic platform to help you to improve your market awareness or your situational awareness for investing. And as I was getting ready for this video, I sort of thought about it. Situational awareness, Seeking Alpha, same initials. Anywho, let's get back to the website here. You know, when you bring up seekingalpha.com, I'm impressed by sort of the simplistic design. I think it sort of gets you where you need to go very quickly. And I would tell you the main ways you want to use this site, or the main links you want to focus on, are on the left column here. I'm going to highlight 3 tools that I use on Seeking Alpha all the time to better understand the markets, to improve my own situational awareness, and to identify some actionable ideas. And actually stick around for the end of the video. I'll share with you 3 stocks that came out of my own use of the Seeking Alpha premium features today. We'll start with what's called the Portfolio Health Check. And they actually have a whole suite of portfolio tools. You can get to that on the left column in a section called Portfolio. You probably don't have one set up yet if you're just new to this site. So you click on Create Portfolio to get that going. I have just a sample portfolio. This is totally made up. I do not hold any of these stocks, actually, so don't draw too many conclusions. I just picked some big names in the Dow, NASDAQ types of stocks just to give us some examples to work with. But the moment you add a series of stocks by the tools in the upper right, the moment you start adding them in there, you all of a sudden start getting some really interesting information about what sort of bets you're making. And I will tell you in a little bit, we'll talk about the quant rating, we'll talk about the analyst ratings, and all of those sort of proprietary tools that are on the Seeking Alpha platform. I love that you're immediately able to start assessing your own portfolio construction, your portfolio setup as evaluated by some of those proprietary tools. But the real thing I want you to focus on was what's called the health score. And I love the fact that it sort of takes all of the stocks in your portfolio or ETFs, sort of gives you an aggregate score. And again, this is using their proprietary model. So you can see based on some of the stock rankings and stock recommendations that are embedded into the platform. You can see what stocks are in which buckets according to that breakdown. You can see where your portfolio sits relative to others on the platform, and again, just gives you a sense of how well you're doing at putting some of these ideas together. At the bottom, I love this one, which is ranking your portfolio on different metrics. I am not surprised based on the sample portfolio, by the way, that my valuation score is an unhealthy D+. My profitability is pretty healthy. I have a lot of big mega cap growth names. They've had such a run in 2024 that valuations tend to be a lot less attractive just because the price has gone up so much. And a lot of those companies are able to earn money, but arguably the price has gotten ahead of those potential earnings very, very quickly because the price has gone up so much. And when the numerator goes up and the denominator stays about the same, your valuation gets a lot rougher. So again, what's interesting about this visualization, what they call sort of the health check, is that it's sort of like taking your portfolio to the doctor. And when I used to work with a big money management institution in the Boston area, we would always talk about working with the technical research team as taking your portfolio to the doctor, right? And sort of doing a health check, doing a wellness check. And while it's not necessary, it's not required, right? It's not something that is something you really want to make time to do. By making time to evaluating your portfolio based on these metrics, I think it's just going to help you make sense of things. You can also break down all the different ratings. They have a series of grades that they do in terms of valuation and growth and momentum. You can finally look at your portfolio just in terms of the weights. Focus on some of your bigger bets, some of your smaller bets. It estimates your income based on the dividend component. And again, all of these, and again, this is dummy data that I put in here. This is fake data just for example purposes. I would say that, as opposed to doing the sort of analysis on your brokerage website, which is where I would normally think to do it, by incorporating it right into your Seeking Alpha login, you can actually look at some of their proprietary metrics as well, draw in some of the latest market data, some of the latest valuation metrics, some of the latest proprietary content and ratings, and just have a more informed analysis of your portfolio. By the way, this is a group of holdings that I just put in as an example, but do you know you can link your brokerage account? So if you use Fidelity or E-Trade or Schwab or any of the platforms that you see on the screen, or even some others, you can actually directly link your holdings right into your portfolio. So you don't have to go through and do it manually and reinvent the wheel, as it were. So the first tool that I really love doing is called the Portfolio Health Check. And again, it's like taking your portfolio to a wellness check at the doctor. It's something we probably avoid doing because it's just one more thing to do. But I will tell you, your life will be easier as an investor, I would assume, if you're able to do this regularly. And I would encourage you to set a time once a month, once a quarter, certainly once a year, to import your portfolio holdings into a platform like this and really go through the analysis and make sure that the bets you're making are the bets you still want to make. All right, second tool I would say is on the left. Let's say you want to swap in some things. Some of your portfolio doesn't look particularly good and you're looking for some new ideas. That's where the Seeking Alpha Stock Screener can be so valuable. In the left column, you click on Stock Screener. They have a series of pre-designed screens that you can start with. I always like to start with the pre-designed screens only because it gives you a starting point, right? You can create one from scratch and sort of build your universe, but these are curated lists that some of the Seeking Alpha experts have identified, sort of classic things you'd want to do. I want stocks with high quality dividends. I want stocks that are rated high for value metrics or growth metrics. I'm looking at small cap names. I'm looking for top stocks rated by their quant, their proprietary quant score, and that's where we're going to start. But again, you can click on any of these as a starting point. You can then take that screen and tweak it from there, customize it from there. And I always encourage people to start with one of the pre-designed screens and then tweak it from there, right? Sort of make it your own by adding or subtracting different criteria. So what this is doing is using the proprietary quant rating, and I enjoyed meeting some of the members of the Seeking Alpha team earlier this year at the Money Show in Orlando, talking to them a little bit about how the quant rating is constructed, and having broken down the model in a little bit, I will tell you that it's very similar in essence to models that I would have used as an institutional investor, which we would call alpha models. These are models that we use to look for the criteria of successful stocks in the past and look for stocks representing or demonstrating those similar characteristics today. The idea is you find the kind of stocks that tend to work in different cycles, and then you look for the current stocks demonstrating those same characteristics, with the idea that if it's worked before, it's probably going to start working again. By the way, I was so excited to see Dave Incorporated on the top-rated quant list. We're bullish on Dave apparently at Market Misbehavior, and Seeking Alpha tending to agree. What I love by these, by the way, but looking at some of these proprietary quantitative models, it may lead you to stocks you're less familiar with, and some of these may be too small. You may not want to go to a Kingstone Companies that's under 200 million market cap, but you can always filter that and restrict it by market cap or look for particular sectors or whatever is more in line with what you're trying to do with your portfolio. But anytime I do what's called a bottom-up screening process, something like this, where you're just looking for companies demonstrating certain characteristics, I find it often points you to names you would not find on your own, right? Because it's not, bringing any of your preconceived biases. It's not sort of bringing your mental baggage or history. It's just looking very objectively, what are the stocks that demonstrate good characteristics based on the criteria that you put in there. I would also say once you get the results, so this is the top-rated stocks based on their quantitative model, you can start to go through all the different tabs at the top, which really allow you to break down the list and focus on good opportunities. One of the things I like to do after running a screen is go to the Momentum tab, because this allows you to do things like, I only want stocks that are pretty close to their 200-day moving average, or I want stocks that have, demonstrated some performance characteristics. And by going through some of these tabs, focusing on some of those names, sorting them based on where they're at relative to those different metrics, you can get some really interesting ideas. And again, it's just meant to point you to things that you may not have been able to find all on your own. So I'm a big fan of the quantitative model that they use as part of their stock screener, because I think it's a great way of combining different fundamental and technical criteria into one master rating. 5 is the top rated number. It goes from 1 to 5. And so focusing on those ones in the top quartile and the top quintile, right, with a relatively high rating based on that quant model will just help you avoid some of the junk, some of the things you probably don't want to be focused on, and focus on some of the better opportunities. And again, you can create your own screens, which I've certainly done, but I would always encourage you to start with some of their pre-designed screens and then tweak them from there. So that's the second tool, using the stock screener to identify some potential opportunities. The third thing I would say is if you want to just sort of think about themes, thematic investing, look for, AI plays or beverage names, banks, aerospace and defense, Bitcoin or cryptocurrencies, cloud-based names or stocks with big exposure there. They have curated lists of stocks based on a number of different themes. This is what they call their stock and fund comparison tool. You can get to that in the left column where it says comparisons. I was flicking through this list earlier today, and I really love how it just allows you to think of a particular theme like artificial intelligence. You can click on here and it'll highlight some of the names with the biggest exposure to that particular theme. So if you've read about something in the news, you have a headline that hits and you think, what are the companies that are going to benefit the most or struggle the most based on this? What's a way to play this theme in the years and decades to come? This is a really good starting point because it shows you the companies that have the exposure. It allows you to analyze performance. It allows you to look at some of the proprietary ratings that are part of Seeking Alpha. And again, focus on some of the stocks that score well based on those quantitative models, but also are a play on that theme that you like. Within the AI stocks, as an example, you can go to the bottom, find the quant factor grades. You can look at things like price momentum, valuation, and growth factors, and you can see which of these companies are scoring quite well. NVIDIA is a name that many of us would know. Not surprising that valuation is scored pretty low because it has had such a strong year. And as a result, when the price elevates so much, as we mentioned earlier, valuations start to look a lot less attractive because the idea with valuations, you want to buy stocks that are undervalued. But if you look at growth, if you look at profitability, if you look at momentum, all of those things score quite well. This is what we have to do as investors, is sort of look at the overall weight of the evidence and balance an unfavorable valuation score with a very favorable growth or profitability score and decide where we want to start to place some of those particular bets. So I think the comparisons tool is a really interesting way to think about different themes. If you don't even know what to look for, just flick through some of these themes and you'll find things like gold stocks, like retailers, solar and renewable energy, utility names, all of these different sort of buckets of names around the equity space, just to nudge your thinking and give you ideas of how to place some of those emerging and popular investment themes. All right, so those are the 3 ways that I like to use Seeking Alpha. The portfolio health check, which is like taking your portfolio to the doctor, looking at the stock screener, particularly the quant rating as part of Seeking Alpha, to focus on top performing names based on those different proprietary rating systems, and then looking at the comparison tool to uncover different names that are plays on certain investment themes that you may be familiar with. Before we get to the 3 stocks that I handpicked for my own use of these tools earlier today, I do want to remind you, Seeking Alpha is a fantastic website, and they were offering some killer deals around Black Friday. I would encourage you to check out their tools. If you go to marketmisbehavior.com/Seeking Alpha, you can get to my landing page there. That's an affiliate link, which means you get a little better deal, and it helps me make Market Misbehavior awesome. So I see it as a win-win for both of us. I'm a big fan of their premium tools and the other features of the website, as I've demonstrated here today. I hope you can check it out, and hope you find that it is a good way to improve your own situational awareness. All right, let's look at the 3 stocks that I pulled out of my own use of these tools. Number 1 was Capital One Financial. Capital One actually scores pretty well based on the Seeking Alpha quant model. I found it when I was looking for stocks with decent dividend components because I was looking for ways to sort of play that dual role of strong performance and strong quantitative rating. And when I saw Capital One, I immediately thought of the benefits of a yield curve that is becoming less inverted and more normalized. Regional banks and companies like Capital One basically make money on the shape of the yield curve. If the short end of the curve, right, short-term rates are low and long-term rates are high, essentially what they can do is borrow money at a much lower rate and lend it out to you at a higher rate so that you can buy a house, buy a car, start a small business, all those things you need to do that require capital up front. That shape of the yield curve is how smaller banks, certainly with a focused sort of lending model, are able to make money. And as the yield curve has been inverted for a couple years now, and as it is very close to becoming uninverted, as the Fed is lowering the short end of the curve and as the longer term rates are remaining stable, if not coming up a little bit, that normalization of the yield curve, it should be a pretty decent tailwind for banks. And so Capital One Financial, I think, is a great way to play a more steeper yield curve going into 2025. And I would also say from a technical perspective, it's really improved. The chart of Capital One really hit resistance in July, hit resistance again in September, right around 150 to 155. It broke out and is now in a pretty strong pattern of higher highs and higher lows. Recently gapped higher in early November, pulled back to 180. So in the short term, that's where I would sort of look for any short-term support. But overall, higher highs and higher lows, strong uptrend. Another chart that came up, or another stock that came out using the proprietary ratings and using the stock screener was T-Mobile, TMUS. Now, here in the Seattle area, we play baseball in T-Mobile Park, so it's a brand that we are surrounded with at all times, I feel like, in the Seattle area. But they definitely, the price is definitely represented or recognized as being in a fairly consistent uptrend. With a chart like this, a lot of times I have people saying, well, I missed it, right? T-Mobile's already up quite a bit. It's in a strong uptrend. Is it worth getting into it now? And I would argue, looking at the chart, there are a number of times in the last 12 months when you could have said that exact same thing. Imagine here if you'd avoided T-Mobile in May of 2024 because the price had gotten all the way up to 170, and that's before going up to around 250, which is where we're at here, right around Thanksgiving in 2024. So one of the things that I've learned in my career is never to be afraid buying the new highs list. As a matter of fact, I've learned to be much more comfortable buying the new highs list than buying the new lows list. Stocks making new 52-week lows are in a period of distribution. These are stocks that people don't want to own, and you can tell that by the fact that the price continues to go lower. Something like T-Mobile is actually in an uptrend, which tells you that more and more investors are willing to pay more and more for the opportunity to participate in further gains. So strength tends to beget further strength in investing, and I would say T-Mobile, which has already had a pretty decent run, still is in a position of strength. Now, that does not mean you don't want to use good money management techniques. So as always, I'm looking to see if this price would continue to make higher highs and higher lows. So on a pullback, I'd want to make sure we held 232. Staying above an ascending 50-day moving average is always a really good thing. So if we would have a sell-off and break below the 50-day, I'd probably move on to some other idea. But when a stock is in a primary uptrend, when the momentum is positive, and when the relative strength is this impressive, that tells you this is a leading stock. It's a strong stock getting stronger. Those are the types of portfolio names that I tend to appreciate quite a bit. So T-Mobile is chart number 2. The third one, I was actually looking at the comparison tool on Seeking Alpha, looking for some cryptocurrency plays. I do have positions in Bitcoin and Ethereum, and I'm looking to diversify that out a little bit and gain further exposure to crypto theme, but not by necessarily owning more Bitcoin. I want to look at other ideas. So looking at the comparison tool, I found names like Square and PayPal, which really are payment processors, but cryptocurrencies have become a big part of their approach, and they've been some of the leaders in the industry at incorporating cryptocurrency tools right into their payment processing. So PayPal overall, I would say, was a questionable chart back here in 2023, arguably a primary downtrend of lower lows and lower highs. First half of 2024, it stabilized, and coming off of an October 23 low, sort of settled into a range between 57 and 68. Then, in August, it actually broke to a new high. We pulled back and tested that breakout level, which is a classic technical configuration called polarity, where resistance becomes support. So it played out beautifully. We gapped higher in September, have continued to push higher, and from there have had a fairly consistent pattern of higher highs and higher lows. They last reported earnings at the end of October, and from there we've bounced off of the 50-day moving average up to a new 52-week high, just above $88 a share this week. Same as we saw with the charts of T-Mobile and Capital One, this is a stock in a position of strength. I would say I'm encouraged by the momentum that is strong but not excessive. I'm encouraged by the relative strength that has continued to improve from July through November. You're outperforming by owning PayPal versus the S&P 500. And as long as that trend of higher highs, of increasing slope in the 50 and 200-day moving averages, of strong momentum characteristics and improving relative strength, I'm pretty happy with a chart like PayPal and assuming that that's going to continue until the chart tells me otherwise. There you go. Those are 3 stocks, Capital One, T-Mobile, PayPal, that scored well based on some of the tools on Seeking Alpha and that I found could be interesting ideas here going into December of 2024. As a reminder, go to marketmisbehavior.com/Seeking Alpha to take advantage of their fantastic deals right around the holidays here, a Black Friday sale that goes through December 3rd. So make sure you check it out now. For Market Misbehavior, I'm Dave Keller. And remember, it's always a good time to own good charts.